through to the fourth quarter and first quarter of next year, and then there are promising signs on the vaccine front. So, hopefully that provides a more durable solution. But for the near term, we think that the absence of lockdowns means that it's not likely to be something which is going to drive stocks down.
Kieran, overall, are you pretty optimistic about U.S.-China relations normalizing, if not stabilizing, from here?
Well, I think we're certainly entering a risky phase because if we see an uptick in tension.
New order placed to sell short Japanese yen at 106.515. I'm placing a new order to sell short Japanese yen at 106.515. Okay.
The talk so far has been centered on individual technology companies and regulation there. And for a broad economic impact, we don't think that's going to be too large. It's the phase one deal is what really matters. And as your previous guest was saying, I think we are seeing some increase in purchases from China on the oil side as well. We saw today to try and fulfill the terms which have been challenging to meet against the backdrop of the pandemic. So we think that ultimately the phase one deal will hold, but we have to acknowledge that that is a risk as we head into the next few weeks.
So if you look at the downside risk to the U.S.-China relations, it could be, a blockage on tech companies or extra tariffs. What does that do to the markets? If you construct your ideal portfolio, Kieran, how much of an issue is that, and what do you buy into?
I think that the tech side of things is kind of interesting because we're increasingly getting this divergence between the sort of US tech world and the China tech world. And for our investors, that means that we have to talk increasingly to them about diversification. It's not only about being in the US tech names, or for our Asian clients only being in the Asian tech names. You have to be diversified across the two, so that if we start to see some of these challenges like we're seeing at the moment with WeChat and with TikTok, then at least you're well diversified between the two worlds. I think more broadly, as I said, to get market downside, you would need to see a removal of those phase one tariffs. And I think if we go back to the end of 2018, and then that's the kind of market environment we'd expect if we start to see that being removed.
Short position open on Japanese yen at 106.515.
What's the market, pricing in right now?
Yeah, as you say, if you look at the betting markets, they're around 50%, just over 50% on a blue wave. So that's Biden plus the Democrat Congress, and then the sort of next most likely outcome is Biden plus a split Congress. So we think that's broadly where the market is today. What we're talking with our clients about is sort of how they can reduce their exposure to some of the stocks that are going to be more sensitive to the election outcomes. So obviously, if we look at things like banks, we look at energy, we look at healthcare, some of those stocks are going to be quite sensitive to the results of the US presidential election. But there are plenty of stocks and sectors in the US that we see as attractive and aren't so dependent on the outcome. So if we look at things like communication services, as a secular growth play that isn't going to be particularly dependent. We can look on parts of the technology sector that haven't really been in the regulatory spotlight of late, and they also look attractive. And then of course things like consumer staples, notwithstanding the trade issue I just discussed, they also look relatively attractive. So we're just talking with our clients about how to position in those stocks which aren't going to vary so much based on the outcome, because even though the markets is getting increasingly positioned for a Biden victory and a blue wave, as we learned from 2016, these things are not super predictable. So we think it's best to be positioned in the sectors that aren't going to be so affected.
Kieran, if you look at regionally, do you prefer the US or Europe or even Asia? I know we have a couple of questions when it comes to the UK, given the furlough schemes maybe were more robust than elsewhere in the world. Where do you see the kind of the regional divides?
Yeah, I think if we rank those, then Asia would be our highest, followed by the US, and then followed by Europe in last place. I think if we look in Asia, we've got a good combination of growth is strong in China, and we're seeing that sort of V-shaped recovery coming through. And you mentioned obviously the stimulus efforts that are going in there. And the market is relatively attractively valued against the US. So Asia's our sort of our top pick if you choose out of those that you just framed. Then in second place, then the US. Valuations are relatively high, but then you've got a secular growth story there with some of the large cap names, and we think the mid caps are also looking more attractive today. It's Europe where we've got the more concerns, or the Eurozone more specifically, where we have the concerns. We think that the earnings picture there is more clouded, and it's going to take longer for earnings to return to the levels they were at pre-pandemic. So if we look at the US and Asia, then that's more of a 2021 story. In Europe, that's going to take until 2022, we think, to get back to pre-pandemic levels.
So what's happening with euro? Euro's rising quite a lot. Is that on inflation expectations?
Yeah, so I mean, it's rallied back quite a long way, and we think that was people shifting out of the US dollar due to the interest rate differential falling, and at the time of the rally, then we were seeing obviously an increase in virus cases in the US at a time when it looked like Europe was managing the crisis relatively well. We think at this point that rally is probably going to consolidate, and we're just going to see a period of range trading for euro dollar at the moment. A lot of short positioning has built up in the US dollar and long positioning already in the euro. So we think the scope for near-term gains is more limited. But if we look over a more strategic horizon, then we're definitely talking a lot with our clients about how to diversify, away from the dollar and towards other currencies, whether that's the euro, British pound, Swiss franc, Chinese yuan, even gold, because we think that the dollar story over the longer term is weakened. It's, of course, overvalued to start with. But then in addition, if we layer on the weakness in interest rates that we've seen in the US recently, and also the twin deficit story, we think the dollar is structurally likely to weaken longer term.
Great, thanks so much. Kieran Ganesh there from EBS stays with us. Now, coming up, oil continues its steady push higher ahead of Wednesday's OPEC Plus gathering. What the outlook is, what's the outlook for the supply deal? Well, more on that next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, gold is trading steady today. That's after it ended last week with its first weekly drop in more than 2 months and after hitting an all-time high earlier this month. Meanwhile, oil is actually trading near $42 a barrel ahead of a key OPEC Plus gathering this week. The cartel will meet to assess its supply deal as countries continue to contain the virus that's crushed fuel demand globally. Well, still with us is Kieran Ganesh from UBS. Kieran, first of all, do you buy gold at all at these levels?
Yes, and we have been adding it into our client portfolios over the course of recent weeks to benefit from the appreciation we expect to see. And we think that in an upside scenario for gold, it could even reach $2,300 per ounce. We think essentially we've got something of a perfect environment for gold where we've got very, very low interest rates in the US. So that's eliminated the opportunity cost of investing. At the same time, many investors are thinking about, how can I diversify portfolios at a time when bond yields are zero? Where can I go? Gold is clearly something that they're coming up with as an answer to that question. And then if we layer on top some of the longer term inflation uncertainty that's being created by all of the money printing and the high levels of government debt and the geopolitical tensions that we talked about a bit earlier between the US and China, we think this is a very good environment for gold, especially in a portfolio context, to help diversify portfolios against other potential risks. So, as I said, in an upside scenario for gold, we're looking for $2,300 per ounce, and it is something that we've been adding into client portfolios recently.
And Kieran, is this a bet against deflation or against inflation?
Yeah, well, I mean, I think longer term gold is typically seen as a hedge against inflation, but as I said, I think it's primarily a sort of a real rates play. So if we get that combination that we've seen recently of rising inflation expectations, but with the Fed anchoring nominal rates, then you see real rates dropping, and that's a really good environment for gold. So it's an inflation hedge for the longer term, but really a real rates play.
Kieran, what do you do with oil? So if you look at some of the commodities, I don't know whether oil is symptomatic anymore of actually the world economy and whether if it goes down, we should worry really about demand or whether because there's so much focus on renewables that it's slightly kind of not matching what could turn ugly in the world economy.
Yeah, so I mean, oil is also something we see as attractive, and we've been adding commodities more broadly beyond gold also to client portfolios recently, so including oil and including some of the base metals. And we think that as we're getting this recovering global economy, as trade starts to pick up, as consumption starts to pick up, and production should start to come through soon now as companies try to restock some of their inventories. We think that oil prices are going to see appreciation because of that increase in demand. I mean, you mentioned the OPEC meeting coming up. We've seen relatively good supply discipline from OPEC recently, so we think the supply is going to remain constrained.
Kieran, thank you so much. Kieran Ganesh there, multi-asset strategist at UBS. Now, coming up, President Trump's advisor, Jared Kushner, says the agreement between the UAE and Israel to begin normalizing relations will change the paradigm in the Middle East. We hear from him next. This is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a taxi.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The US and China have postponed trade talks that were supposed to happen over the weekend. They were aimed at reviewing progress at the 6-month mark of their Phase 1 deal. The talks never made it onto any official calendar, and they have now been shelved indefinitely. The UK's exam crisis is growing. It suspended its criteria for appealing results just hours after they were published. The regulator Ofqual says they are now under review. It comes as scores of students saw results for their A-levels, which do determine university placement, downgraded by an algorithm. Many from economically disadvantaged areas were hit hardest by those changes. Japan's economy has suffered its worst quarter in data going back to 1955. GDP shrunk 27.8% on an annualized basis. That's as lockdowns around the world hammered the country's exports, consumer spending, and indeed production. Now, after 3 straight quarters of contraction, Japan's economy has shrunk back to its size after the 2011 tsunami and nuclear disaster. And protests are growing in Thailand. More than 10,000 people rallied in Bangkok yesterday. They are calling for an end to the military-led administration and for the monarchy's powers to be reined in. Now in Thailand, openly criticizing the monarch can lead to long jail sentences. It comes as the nation's economy has fallen the most in 22 years. Second quarter GDP shrinking over 12% from a year earlier. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, ministers from Israel and United Arab Emirates plan to meet soon following a landmark call this weekend. President Trump's advisor, Jared Kushner, says the agreement to begin normalizing relations will change the paradigm in the region. Well, he spoke with Bloomberg's Kevin Cirilli.
Prime Minister Netanyahu is a visionary leader. He's very tough. He understands what's important to the Israeli people, but most importantly, he understands what's critical to Israel's security and Israel's economy. And so right now, he believes that it's much more important.
Stop on profit placed for Japanese yen at 106.495. I'm placing stop on profit at 106.495. It will give us, if it will reach this level, £200 in profit.
Not all the way, but some areas, and especially how the economic situation because of the pandemic and the medical situation in both Israel and Palestine has forced them to relook at things regarding water, cybersecurity, and technology. However, the Palestinians really denounced this deal. At what point do you have to put additional pressure on Palestine in order to get them to broker that Israel-Palestine deal?
Yeah, we don't want to pressure the Palestinian people. And look, I think a lot's changed over 25 years, right? People have seen that a lot of the approaches haven't worked. People want better lives for their children. They want to live in peace. They want security. They want economic opportunity. I think that that's just the natural evolution. People are tired of conflict, tired of war. The Middle East has had problem after problem after problem. President Trump's come in. He's recognized the realities on the ground, and he's tried to sort them out as we go. And so with regards to the Palestinians. What we did is we laid out a good vision for what could happen. We got Israel to agree to a Palestinian state. We got Israel to agree to potential borders through a map that we published. And we have we created a conference in Bahrain where the international community came together and endorsed our plan to provide $50 billion over 10 years to double their GDP, create 1 million new jobs, and help them have a better quality of life. So when you see denouncements and disagreements, I think that the people, the Israeli people and the Palestinian people, are much closer together than perhaps where the Palestinian leadership is. And so the hope is that over time the Palestinian leadership will see that they have so much more to gain for their people and for their legacies by engaging and resolving these long-standing conflicts than by putting out the same tired statements that, quite frankly, haven't brought progress for their people.
I've got two more questions for you. One as it relates to Iran. From a geopolitical sense, you know this, Democrats have been campaigning saying that they would rejoin the Iran deal. Senator Kamala Harris, who of course was named as the running mate to the presumptive nominee, has said she wants to rejoin the Iran deal. Democrats say that coalition building is a contrast to the foreign policy strategy of this administration. How important of a role did Iran play in these negotiations, and what's your response to those who argue that the Iran deal would restore some allies?
Look, I think that Americans are smart, and one of the reasons why people elected Donald Trump is because Americans were tired of their politicians making stupid deals. The Iran deal was one of the worst deals that any American diplomat had ever made. It put Iran on a glide path to a nuclear weapon. It gave them $150 billion, which they used directly to fund terror. And, you know, it's not like the next day they said, okay, America's great, let's work with them. The day they signed the agreement, they were in the streets chanting death to America, death to Israel. So I'm not sure what that agreement accomplished other than antagonizing everyone all over the world. So it was a terrible deal. America made terrible trade deals. President Trump has changed all of that. The American people want to see our troops brought home. President Trump has tried to end the war in Afghanistan. He's already reduced our troops there significantly. He wants to rebuild American cities. He doesn't want to rebuild other nations. And I think that President Trump, as you've seen through this, a lot of the Democrats have attacked him for his diplomacy. He's going to cause wars. He's isolating. Well, that hasn't been the case. He was able to create a historic peace agreement yesterday that the previous administration and the administration before were not able to accomplish. So I think that with President Trump, you have to separate the media and you have to separate the political jostling from what he really does. And what he does is he brings a common sense approach. He's not afraid to say what he thinks, and he brings results, and that's what the American people want. So I would just say this, rejoining the Iran deal on the old terms would be absolutely catastrophic for America. It would be catastrophic for Israel. It would be catastrophic for the whole region. Because again, what the vision of what Iran wants to see is not consistent with what's in America's interests.
Well, that was Jared Kushner, the President Trump's son-in-law and advisor, speaking to Bloomberg's Kevin Srili. Now, ahead of that landmark call between the UAE and Israel, we spoke with the UAE's Minister of State for Foreign Affairs, Anwar Gargash, and he told us the decision is about helping the region.
This is a sovereign decision of the United Arab Emirates. Our calculations were that on the bilateral front, this is good for us. And our calculation was on the regional front that this is something that we can actually get something done, which is to do with annexation also.
Do you expect Saudi Arabia to join you?
Again, these are, you know, I've seen a lot of speculation today about this country and that country. And again, these are sovereign decisions. We did not do this because we expect this country to join us or that country to join us. But our calculations were very, very clear. Our calculations were, on the one hand, how can we do something while at the same time achieving something with regards to stopping annexation. And I think this was very successful by, you know, rationally and realistically coming across and saying, we're formalizing a situation that is developing. This is where this relationship is going to go next year or the year after. Why don't we do it now? And if we do it now, can we actually get something in return to support and help the region? And I think we've achieved that.
Well, Well, there are growing concerns that some countries in Europe may have to reinstate lockdown measures as virus infections start rising again. Now, at the weekend, Italy ordered nightclubs to close, matching a similar directive by Spain on Friday, and France warned that all of the country's COVID-19 indicators are trending upwards. Well, for more, Sam Fazeli, Bloomberg Intelligence Director of Research, joins us. Sam, first of all, what can you tell us about the resurgence of the virus overall? So we're also seeing some cases in New Zealand, Australia. You know, we still have concerns about the Middle East, but also some parts of America. So are we seeing a second wave, or is it just a case of looking at countries and try and keep the infection at bay?
Yeah, hi, good morning, Francine. So I think you could call this a second wave, and I suspect that everybody to a degree expected this. You know, you relax the rules. As soon as people get out and get close to each other, then the virus has an opportunity to continue to start spreading again. And this virus seems to be incredibly capable of transmitting from person to person. What's interesting, of course, is we still don't know exactly how the outbreak in New Zealand came about. At least I'm not aware of any detail on some of the cases there. So that's going to be quite interesting to work out, because they had clearly, you know, a virus just can't appear out of thin air, so it must have come from somewhere, and it would be important to find out what that source was. And then in general, obviously, we're now going to have to figure out what politicians are going to do with regards to, what governments are going to do with regards to restrictions, because if you just leave it, it will continue to spread, and the cases will continue to rise. So that's the thing that I think it's going to be interesting to watch.
Where are we on the vaccine, Sam?
Yeah, so it was a relatively quiet week last week, which is a good thing because I was away, although I kept my eye on it. But we did, we're waiting for several new pieces of data. We haven't seen the details, any more details from Johnson & Johnson's vaccine yet, so we're looking forward to seeing some of that. Some of the newer technologies, like Imperial College was using one of the RNA vaccines, so we're hopefully going to see some news out of that. And obviously, the completion of AstraZeneca's phase 3 trial. I mean, they started, at least on paper, their phase 3 trial a good 2 months before Pfizer and Moderna did. And it sounds like, from what I've been hearing, that they haven't quite reached the 10,000 odd subjects they wanted to recruit. The last I heard on a government podcast yesterday was about 9,000. So this also means that the ones who are trying to do 30,000, which is Pfizer and Moderna, might take longer than some people have hoped. So let's see how that's going.
Sam, what can you tell us about therapeutics? Have we had any big developments, or is it the same drugs that were used a couple of weeks ago?
Yeah, so no new drug information. There are quite a lot being studied, and some specifically rather than repurposed. If you think about what we've seen already, remdesivir and dexamethasone have been essentially repurposed, which is not a problem, but drugs specifically being tested in terms of treating the disease or being antivirals, we're still waiting for some news on that. Particularly people like Pfizer and Merck are doing some interesting work in that area. And then you've got the immune system, which somebody said, I think Patrick Vallance said this. Sir Patrick Vallance said this on that same podcast. Immune system in a vial. This is therapeutic antibodies, so antibodies that have been made, so basically give you a straight response to the vaccine, to the virus. They seem to be having a tough time enrolling patients again. So, of course, this means everyone's scrambling for patients now. So that's going to be quite an interesting one to see. And this could impact the newer vaccines that are going to start enrolling patients in the next few months, and see how that, whether they'll be able to do better once you've got results for existing vaccines.
Sam, thank you so much. Sam Fazeli, there, Bloomberg Intelligence Director of Research. Now, coming up, Russia is ready to send troops to support Alexander Lukashenko. The Belarus president phoned Vladimir Putin to request help countering protests. We'll be live from Moscow next. This is Bloomberg.
Position closed on Japanese yen. At 105.495 we have a profit, £200.
This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now, Russia says it's ready to help Belarus in the face of unprecedented protests. Hundreds of thousands of people rallied at the weekend, demonstrating against the disputed election result, which saw Alexander Lukashenko return to power. Well, they're now demanding his immediate resignation. In a call with the Belarus leader, President Vladimir Putin offered support to resolve the country's problems. Let's speak to Tony Halpin. He is Bloomberg's government editor in Moscow. Tony, how bad is the situation right now?
Well, for Lukashenko, it's growing more and more serious. I think today there was a call from the opposition for a national strike to begin in many of the country's state-run factories, and thousands of workers have responded indeed and walked out of those plants. Lukashenko today, in fact, visited one of the factories and tried to dismiss the protests as the work of a small minority of employees, but even as he spoke, there were thousands gathered outside the factory gates chanting for him to resign. So it's very difficult, more and more difficult, I think, for his regime to maintain the pretense that this is only a very disgruntled few who didn't really have any impact on the election result. It's more and more clear that he's facing very serious opposition.
But, Tony, with the support, so there are calls for a general strike today, but with the support of Russia, will he just stay in power?
Well, I think that's his hope, that he can